Joining us now is David Barr, CEO of Third Avenue Management, who's gracing us here. You're managing $12.5 billion, so you probably got to get back to work at some point. Value investing, everybody talks about it. You do it a little differently. Can you explain it?
So we consider ourselves the value investing alternative. Why? Because value investing was really the outgrowth of two guys named Benjamin Graham and Dodd, right? Graham and Dodd. And the last time that book was written, The Intelligent Investor, was 1971. So everyone talks about Graham and Dodd, but nobody's really read it. So Marty Whitman got so upset about that he wrote his own book, which is really what we think the modern paradigm for value investing. A little higher. There it is.
There it is. Modern Security Analysis, Marty Whitman. Yeah.
Okay, so we're very focused on creditworthiness, which a lot of value investors don't really pay a lot of attention to, the quality of a company's balance sheet. First, trying to figure out what's in that company's assets and what the liabilities are, both on and off the balance sheet.
Because you don't necessarily think that matters unless the tide comes down and you see everybody's naked in the pond, right? Otherwise, I mean, crappy balance sheet companies can do well in a bull market, can't they?
They can, exactly. And so for us to survive through difficult time periods, which we're not going to predict the future, right? We want to make sure we have some safety. And Graham and Dodd talked a little bit about that in their term of margin of safety, right?
Yeah.
But we're really getting deeper into a company and trying to figure out what it's really worth, set a value for that business, and then hope that the market gives us an opportunity to buy it at a discount from that.
So I wish we had more time. You're going to have to come back. We should do some individual stocks. A lot of our people like to see that. What makes it gets through that screen and comes out?
Yeah, so we end up coming up with pretty eclectic portfolios. We're not managing our funds to any kind of benchmark. So we'll end up looking wherever we can to find value.
Globally.
So globally. So one of the securities that I talked about with you in the past is Chung Kong Holdings, right? This is a Chinese or Hong Kong listed conglomerate, probably one of the greatest blue chips that nobody talks about. Run by a guy named Li Ka-shing. He's the chairman and founder. He owns 43% of a $40 billion market cap company. It has investments all over the world, although not in the United States of America currently, and has investments in real estate in a company called Hutchison Whampoa, which is a wholly owned sub that is the largest port operator in the world. And this is trading at an 80% of what we think NAV is, and maybe even a little bit bigger.
And it's a Hong Kong company.
Hong Kong company.
Yeah. All right. Lucadia.
Another wonderful company run by Joe Steinberg and Ian Cumming for many, many years. You look back on the history of that, put that chart up on your screen right now since 1990, what that stock has done for shareholder value. And in March of this year, they merged with Jefferies and named Richard Handler the chairman, the CEO of that company. We've had a chance to recently meet with Joe and Richard and think that the combination of those two businesses with the potential that Jefferies creates for that enterprise to continue making great investments is a real interesting opportunity, and it is, for the first time in a long time, a stock that's relatively inexpensive.
About Weyerhaeuser.
You know, the housing market has really boomed. This is one of the few companies out there that we think still remains a great value, run by a terrific guy, Dan Fulton. He's been on the show many times. We love that business that has three components to it: home builder, timber, and other real estate investing. It's a great company.
Do you have a macro theory about where the street is wrong that leads you to find these value propositions?
No, I think we pay very little attention to what the macro is telling us. I get upset sometimes watching you guys because you spend so much time talking about the macro and get guys on here to predict.
Not him.
Yeah, no, sorry. Because we really can't predict what the future is.
Yeah.
We kind of look individually at businesses, fundamentally try and make an analysis, assign some probability weight to what we think is going to happen with that business. It's an appraisal of management that becomes a key question there, because we want to make sure if we're going to invest with them for the long term, which we do, we've got a good management team as a steward of our capital.
Thanks for coming in. I wish we could talk about these others, Daimler,